We spent 950 days in the offices of the SEC.
Whoa.
Right now, blockchain market cap, 1.7 trillion. You add on another 185 trillion. This is just the beginning. And guys like Coinbase that have been around for what, 5 years? They're already bigger than the New York Stock Exchange and NASDAQ. They could buy them if they want to, but why would they? That's like Henry Ford turning around and buying a blacksmith. You've got to have something with some sizzle to attract people to invest in you. If you don't have the sizzle, you can just forget about it.
The three hardest things in the world are running an ultra marathon, winning a Nobel Prize, and getting a stock exchange license in the US. Our today's guest has been fortunate to have at least one such achievement in this portfolio. Our dear viewers, please welcome Douglas Borthwick, Chief Marketing Officer at INX, a regulated US-based exchange for tokenized securities. And Douglas, thanks for being with us today.
Thank you very much for having us. It's great to be here.
Douglas also participated in the wonderful panel discussion on secondary markets for tokenized securities on Digital Assets Investment Conference we hosted last November. You should definitely check it out. We are your all-time hosts, Boris Pekalov and Ross Shemela, co-founders at Stobox. This is Stobox Interview, a series where we bring industry professionals and rock stars to discuss the future of capital markets, crypto, and finance. Please don't forget to subscribe and hit the notification button to not miss our further exciting interviews. And now let's get to the point. Douglas, please tell us more about yourself and INX business.
Well, my background would be really coming from the legacy side. I was a currency trader from 1996 until 2017. And, my job was sort of to go around the world looking for the weakest currency and then to help give that a little push over the edge. And at some point, people always talked about how the US dollar was the cleanest of the dirty shirts. And at some point I looked at the US dollar and I said, you know what, this actually is a filthy shirt. But the only way you can essentially look at a devaluation of the US dollar is by buying hard assets. And I think, as we all know, Bitcoin is the hardest asset. So that had me then make a switch or a pivot into cryptocurrency. And I ran into INX. I ran into Shai Datika, our CEO, in Tel Aviv. And this was a guy that was working with the SEC to create the first ever security token that could be bought by the retail investor in the US, but also was a full security, and just like Nike or Amazon, in that full reporting, Ernst & Young doing the audits, a prospectus sitting at the SEC. I mean, this was shining a light on an industry that at the time, certainly I and others looked at it and said, there's a lot of gray area in the crypto industry. And what Shai did and what INX has done is really shine a light on that industry and give absolute full transparency. And what we wanted to do was raise money to create two things. One, an exchange for the trading of crypto, Bitcoin, Ethereum, etc. And the other for the trading of security tokens. Now, for the security token side, we pushed forward sort of our timeline a little bit because we acquired Open Finance, and Open Finance was the first ever guy to get the digital licenses from FINRA to be able to trade as a broker-dealer ATS in digital securities. And we acquired them, so now they're under our wing. And at the end of this month, I guess in a couple of days, we'll go live with the crypto trading platform. So it will be a platform where you can trade crypto, hit on a tab and then start trading security tokens. And we think that's all very exciting.
Thanks for sharing. I wonder, what is the difference between INX compared to New York Stock Exchange or American Stock Exchange? What is the benefit for a business to list on INX and issue security tokens compared to more traditional exchanges?
Well, there's a huge difference. First, the New York Stock Exchange is a national exchange in the United States. And what that means is if you list on the New York Stock Exchange, you can sell your stock to anybody in the US. You're not down to what's called blue sky laws. Whereas if you issue something on my exchange, you're limited somewhat because you can only sell, if you're a self-issuer, you can only be selling your stock to, or not your stock, your tokens to folks that have been cleared in blue sky states. So there's a little bit of a difference there. Now, the big exchanges like New York Stock Exchange also have pipes into every single broker dealer pretty much in the world. So huge reach and huge distribution capabilities if you're listing on the New York Stock Exchange. But that's only between the hours of 9:30 and 4 o'clock in the afternoon. And when you buy a share in the New York Stock Exchange, you can't buy it fractionally. You have to buy the whole thing. Now, most people in the world aren't awake between 9:30 a.m. in New York to 4 p.m. in New York. Most people are sleeping. And so if you can offer 24 hours a day service and trading like INX does, well, guess what? We're picking up a lot of the world that the New York Stock Exchange right now doesn't. But on top of that, most people in the world don't make, let's say the average share in the US is $18. Well, for a lot of folks in the world, that's a lot of money. Maybe they earn that in a month. But with fractional ownership of securities that you can do when you go digital, now that opens it up to the rest of the world. So we think of the way that our platform is doing things is we're sort of separating it out. We're making it more democratized investing. So right now, if you go out there to New York Stock Exchange, you got to be awake. You got to be probably in America or elsewhere, and you got to have a lot of money. Whereas when you list on somewhere like INX, well, you can trade 24 hours a day. It's fractional ownership. This is opening up your distribution, not just to the United States, but to everyone all around the world.
That's a fantastic vision. And I wonder, do you also assist issuers with distribution around the world? And even if they register their offering in the US, won't they run in the need to register their IPO in every country in which they want it to be traded? So do you as an INX are able to onboard investors from anywhere in the world?
Well, look, not everyone in the world, everyone's got to go through KYC, AML. They've got to be from a country that isn't blocked by the United States government. And we only list companies that are registered with the SEC. And, there's limitations there as well. It's got to be a public company that isn't listed on a national exchange, or a private company that has come through the Reg D process, Reg A or Reg S. And so there are limitations to what we can list. But in terms of the audience, look, if you're coming over from the UK and you want to buy Nike today, there's no problem in buying Nike or Amazon. I think there's a lot of UK citizens that own US equities, and there's a lot of citizens in France and Germany and elsewhere. And so what we're listing are full securities. So don't think of it as we're listing crypto securities. Under the law, what we're listing is securities. And certainly while they may trade as ERC20 tokens, or they may trade on the liquid network, or they may trade as Stellar tokens, they're all listed as securities under the US law.
Yeah, thank you for your detailed answer. Please share your journey of becoming a regulated security token exchange, doing an IPO. What were the main challenges?
Well, we were the first ever company, and the IPO is ongoing. We were the first company to actually go to the SEC and say we want to do an IPO on the blockchain. So there've been some Reg A's, Reg A pluses ahead of us, but no one that had done a full prospectus with the SEC that wanted their company to be treated the same way as Amazon or Nike, full auditing, full prospectus, Ernst & Young, absolute transparency. No one had gone that pathway before. And so a lot of the time, we spent 950 days in the offices of the SEC.
Whoa.
And that's a lot of going back and forth and defining terms that had never been defined before in the US. When you do, let's say, a drug company and you're going public and it's equity, everyone knows what that is. It's a cookie cutter, cut and paste prospectus. But when you're doing something like we are, we had to explain things like what an ERC 1404 is, or what a smart contract is, what custody is, what digital custody is. All of these definitions we had to define for the very first time for a prospectus. And that's why it's about 260 odd pages. It's so long because you've got to put in all of these disclaimers that had never been used before. And so you had to make not just ourselves feel comfortable with it, but also I think we had 7 or 8 law firms. On top of that, you also had every single department at the SEC. And that's an absolute challenge because you can't go effective. You can't actually start your IPO until you're declared effective. And that means you've got to answer questions, that there's a going back and forth of questions. And you can go on the Edgar database and you can see our prospectus and the number of questions, and you can see all the questions and our answers to them. And so, it's a terrifically long, arduous, but also very expensive job. When you've got a lot of law firms, they're not free. But we felt that building this pathway was important because We believe that the future is going to be digital. And there's no way that Nike would ever be trading on the blockchain if only accredited investors could buy them. And that's where it was before we came along. Only accredited investors could really play in the security token space. And what does that mean? Well, it means that the audience for security tokens at maybe, like let's say an Open Finance or the other folks out there, there's maybe 5, 10, maybe 15,000 people. That's not a very big audience. Let's say only 10% come in a day, 1,500 people. Is that really going to give you the trading volume you want? I mean, think of it like this. Today, the biggest player, I think, does 84% of all security token trading volume, but the volume is only $1 million a day. That might be less than the Italian restaurant that's downstairs from me in Manhattan. That's not really a big market. And so we wanted to change things a little bit by having security tokens that could be traded by retail. And so we had to create it because it didn't exist before. But by creating it, it means that I can take all the guys trading crypto on my crypto trading platform and introduce them now to security tokens. So now, it's possibly millions of people will be looking at something rather than 10,000. And I think that that's now where it goes mainstream. Nothing goes mainstream when it's just for rich people. Things go mainstream when it's for everyone. And again, that comes down to the democratization of asset ownership. People always, in the old days, if you wanted to keep your wealth and keep up with inflation, you had to buy real estate or old masters paintings. That's how it was. And then Bitcoin came along and the little guy realized, I can buy Bitcoin in a fractional format and that'll keep my wealth afloat when we see all this inflation. But at the same time, they couldn't afford, let's say, the master's painting. Well, maybe we can tokenize a master's painting. Maybe we can tokenize real estate. But one of the biggest things that I see with security tokens is the ability now to tokenize your fans. And what does that mean? Let's say I'm Taylor Swift and I've got 30, 40, 50 million fans. I don't know how many fans she has on Twitter. And I say, what, guys, I'm looking to raise money. But she could go directly to her fans now, set up a website, have the fans go to a site, buy tokens in whatever she's selling, let's say a music catalog, and she could raise money immediately. And you see how fast she'll sell out her tickets just to go to a concert. Think about how fast people would come to a website to be able to buy and invest in her music catalog. Be tremendous. And so, you can cut out all these middlemen, the guys that raise money for you, the underwriters, all sorts of different folks that right now take a percentage here, a percentage there. You raise $100, maybe you get $90 after all these costs. But when you do something like tokenization, maybe you raise $100 and you get $99 in your pocket afterwards. So it's a much more efficient way of raising money using tokenization. And then once you've done the tokenization and once you've sold it to folks, well, they can trade it around 24 hours a day, 7 days a week. I guess it's like a scam that equities have right now. Every Friday at 4 o'clock, once the market closed, the PR company comes out and leaves some horrendous news. And everyone's happy to sit back and say, don't worry, I'll get out of it Monday morning at 9:30. Yeah. And then there's a stampede on Monday morning at 9:30 to get out. Why is that acceptable? It's not acceptable in the currency world. It's not acceptable in the cryptocurrency world. But for a long time, it's been acceptable in the equities world. Once we go digital, once everyone goes digital, and it's not just me saying this. Remember, the SEC chairman Clayton on his way out the door went to Philadelphia and did a talk there. He said you can see all assets moving onto the blockchain. Well, when they do, there'll be 24 hours a day trading, 7 days a week. They won't be able to play these PR games anymore. And folks will be able to own things in a fractional basis. And that's going to be absolutely astounding.
It's interesting to dive deeper into what you mentioned about the cost, because actually what probably stops many companies from going into the tokenization journey is specifically the cost and the concern about raising capital from investors, because you still have to invest in marketing. In some of the agencies we spoke with, that some of the companies mentioned that the marketing cost in the token offering may achieve 10% of the expected proceeds. So is there really a cost reduction in terms of the marketing of token offerings, and where does it come from?
Well,
in your opinion?
I think that obviously it depends on how much you're raising. If you're raising 5 million and it's like a Reg D, then spending $500,000 of that to get noticed, yeah, you're right. That's a heck of a lot of a charge. But if you're raising $100 or $200 million, you're probably not going to be spending $10 or $20 million on your marketing. You'll be spending a lot less. And so it really depends upon how big the raise you're doing. But again, marketing, people do marketing because there isn't an audience. When someone lists on my exchange, I can introduce them to all of the potential millions of people that are trading on my crypto platform. And not just them, but also all the token holders that have bought my token. And my token holders can go out there onto social media, however many thousands of them there end up being, and they'll tell everyone about, hey, you got to see this new project that's going to be listing on INX. Now, in the old days, when someone wanted to raise money and you were an exchange like us, they would go out there, they'd maybe get 3 or 4 VCs would raise them the money. And then the money is raised, but then no one talks about you. The way that we've done it is we've gone out there and we've engaged with the community, with folks all across the spectrum, all around the world who have invested in us and become token holders. And these guys obviously get 40% payout of the profits that we make as a company. And so it's in their interest, so every time I list someone, to go out there and tell the world, I've got a built-in marketing organization just from my token holders. And no one else has something like this. It's an absolute machine. And we're really looking forward to the time when the token sale ends and we start listing guys, and you can see the power of that machine, because I think we all understand that the power of viral marketing and the power of social to go out there, it's a lot cheaper than getting ads and putting them out on Google ads and telling people about what's going on and creating videos. It's a lot cheaper just to come to me and then me setting the community out there to talk about what you're doing.
Definitely.
I think this is one of the underrated benefits of doing token offering and getting retail guys at all, that they become your brand evangelists and they are literally invested in your success,
Yeah.
an incentive to support you and spread your message.
The VC and private equity guy doesn't spread your message. They don't go out there and talk about you all the time. They sit there and they call you up and say, what's going on? Where are the profits? When you sell your tokens to individuals that are actually going to use your platform and bring their friends to use your platform and bring their friends and talk about you consistently, that's how you get a platform moving. And you don't have to take my advice. Look at BNB. Binance did a great job. We did a $15 million ICO. And if you ever want to see, folks talking about BNB on Twitter or elsewhere, it's constant. There's a constant hum and buzz about that company. And it's because they sold the BNB token to a lot of folks who own it, want to see it appreciate, and so talk about BNB all the time. But there's other guys that have gone out there and raised money from VCs and private equity in the crypto world, and it doesn't move anywhere. And why do you think that is? It's because they didn't build a community. Building a community in crypto, I think, is extremely important, because you need to have all of these folks talking about you and supporting you from day one. And the nice thing about doing a tokenization or raising money in that way is that they do support you. And there's a big difference between what we're doing for raising money and, let's say, a Coinbase IPO. So Coinbase does their IPO, and the retail investors actually, he's the exit strategy for the venture capital and the private equity guy. Think about that. The venture capital and private equity guys got in at day zero, rode it all the way up to 100 billion valuation, then offloaded into the retail hands. That doesn't make sense. What we decided was, you know what? Let's have the retail guy come in the door first day. They can invest in us on the first day. That's a big, big difference. And so the guy that's sitting there that's bought a token in my company, it's in his interest to see us grow quickly. The guy that buys equity in Coinbase, they're buying the growth that's already there.
Yeah. Thank you for your reply. And from your perspective, how to find investors for the token offerings?
Well, look, investors are all around the world. And you've got to sort of, figure out if what you're selling is going to be important to folks. Now, you've also got to cross the aisle. You can't just look at crypto guys. You can't go to a Bitcoin maximalist and say, look, I've got a security token to sell you, because they're not interested. They like Bitcoin. If it's not Bitcoin, they're not going to buy it. So if you have a security token, you've got to say, okay, well, who's this going to appeal to? Is it going to appeal to the trader? Is it going to appeal? Is it an industrial base? Is it a medical base? Is it a real estate based? Like what exactly is your security token based on? And then you've got to go after the consumer. You've got to find the person that's interested in investing in that. But you've also got to figure out how exactly do they learn about it. If you're doing something that's, very complex and an industrial machinery, then obviously advertising on Facebook isn't going to help you that much. You're going to have to go directly into, trade shows and talk to people directly. but it really depends upon the product. Every security token is completely different. It's got different payout strategies. Some are linked to equity, some are linked to profits. Some are linked directly to real estate, or some are linked directly to point. I mean, because there's so many infinite different ways that you're compensating people for the security token owner, the marketing just differs from person to person, from a project to project. There is no one answer. If I get a real estate project in Prague, how I market that is probably going to be a lot different than if I get, an artist that makes music and wants to sell to her fans.
That's an honest reply. Not many projects would love to hear things like, well, it's complex and you have this thing, but it's honest, and I'm grateful for it.
Well,
and I wonder,
it's not complex. Know your customer. Know your customer is the key concept for any business. And you want to be selling to your customer a security token. You want the person that buying your security token to feel vested in you. And so if you can create a security token that your customers want to own and want to buy and are excited to hodl, I think that's how you're going to find success. But you can't sort of take a security token and think that everyone's going to want to buy it because you've got a great idea. Most people want to buy things because they want to see appreciation. You also have to be just very careful about who you're trying to sell to. Because if you're selling to, quote, the crypto community, you got to understand that the crypto community is very fractionalized. Some people just like XRP. Some people will only talk about Bitcoin. Some people really love Ethereum. But some people only like altcoins. But there's so many different fractions that you can't put in a bucket the crypto guys. There's no such thing as the crypto guys. It's like many, many different tribes all under one roof.
What would you do if you're a B2B business and your customers are actually businesses and maybe a small handful of business owners and CEOs? Would you sell your token then specifically to business owners?
If I was doing B2B for a security token, I'd go around to all the people that I was doing work with and say, would you like to invest in my company? Here's a security token. Because then it's in their interest to partner with you as much as possible to make sure you're successful. Now, if you're B2C, I'd sell to the consumer. If you're B2B, you sell to the other businesses. Absolutely.
And in terms of the demand for security tokens and the client who come to you, who do you see most? Is it Taylor Swift and artists, or is it B2C or B2B companies? What is the general profile?
Well,
and is the demand growing after what you've done?
Well, we haven't gone live with our security token business. We'll go live with that, I guess, in a couple of months. But what I've seen in the space is, shops at exchanges that have maybe 4 or 5 listings on it for years, and they don't really add to that. It's sort of like, okay, so you're kind of asleep. If we want security tokens to be big, you got to take them from being just for accredited investors, but also for retail. You got to increase the audience by factors of millions. And that's what we're trying to do. I'm looking at projects all around the world that are in various stages of doing their prospectuses or doing Reg A's or Reg D's, Reg S's, and then figuring out, how can I use these guys on our platform? How can I list them so that it increases awareness and education in the security token arena? Because while we know security tokens inside and out, outside of 0.00002% of the world, nobody's ever heard of a security token, and it sounds like a mouthful. And so we've got to make sure that we've got lots of projects that are exciting, interesting, that add to the education of folks so people can say, hey, I know this. I could do that with my company. And right now, all you're really seeing is real estate. And real estate is important, but it's not something that's really traded back and forth every single day. It's more of something that people want liquidity in, but that doesn't necessarily mean that they're going to be getting liquidity back and forth constantly. And I want to be able to list projects and people want to trade constantly. And so that's how I'm going to try to change the game, is obviously increase the audience and list things that people find interesting.
Yeah, I want to mention that for a smaller project, often it is very challenging to be listed in INX. And from your perspective, what kind of the liquidity it is possible for the smaller projects that cannot afford filling S1 listing form?
Well, first I would say that there's no project that's listed with INX that is not happy with what we're doing. And that's because we haven't listed any projects yet. We haven't gone live. And so right now, everyone listing with INX is the happiest they've ever been. But you're right. There's challenges for all sorts of projects, but I think that, my job is to go out there and to look at every project that comes to us and says, look, this is what I want to do. And rather than lie to them and say, yeah, you know what, this is going to be great, then sometimes tough love comes into the space. And I say, look, I don't think this is going to be too challenging for you. Maybe it's better that you do a Reg D and you don't list it. I don't think you're going to find liquidity. Or maybe it's better you just raise from friends and family, or you try to bootstrap this from private equity or VC. But it's not for everyone. And anyone that tells you that a security token is going to be, the absolute path to riches is just lying to your face. Some projects are great for security tokens and some aren't. Just like some projects are great for equity and some aren't. Some are better for debt and some aren't. It really is. We won't take everyone that knocks on our door. We're certainly going to do this review process where I've got to wonder, is there going to be demand for this? Will the press really like this story and this idea? Is it going to bring people to my door? And will my community be excited about this? Because I don't want to list things that my community is not going to be excited about. I want, from day one, when someone lists there, for there to be action, for there to be trading, for there to be excitement. And I think for too long, we've seen people just list for the sake of listing because they've been promised something by an exchange. I'm not going to promise anyone anything. I'll promise them that I'll do my best job that I can going out there and talking about them. I'll do the best job I can introducing them to my community. But ultimately, it all comes down to, for a security token, to how good is the company behind the security token? How good is the project? How good is the idea and the vision? And if all of that is a disaster, then there's nothing you can do in the security token side that's going to help fix it.
Probably it's not only about security token side, but any other, if the project is disaster.
That's right. But some people think, oh, security token, I'll bring this would be amazing. But it's not like that. It's like, it's as with anything. You've got to have something with some sizzle to attract people to invest in you. If you don't have the sizzle, you can just forget about it.
And how do you think the industry will change in the future? What are the obstacles we have to overcome to achieve this mass adoption and to gain more good project? And how fast we're going to see your goals being achieved?
Custody is probably one of the biggest things in this space. The ability for institutions to be able to custody digital assets is, I think, obviously key, because obviously I want a lot of broker dealers to attach to my ATS so that they can then introduce these different products to their clients. But when you're relying upon something like MetaMask and an individual self-custody, it means that the liquidity is not there that you want. Now, there's a safe harbor rule that's been suggested by the SEC that FINRA is going to be taking a look at. If they come to that agreement, then we're going to have big changes in custody, and you'll be trading security tokens in the same way that right now, we trade Bitcoin or Ethereum, in that you've got streaming bid offers that are constantly being updated and market makers are excited to be involved. And then you see the institutions start getting involved too, because now they've got a custody solution. And so in order for something to become mainstream, you got to move off the MetaMask wallet and much more into custody, but custody not just by, crypto institutions, but custody by the big players that are in the custody business. Hedge funds don't do custody at BitGo per se. That's not their main custodian. Their main custodian is Morgan Stanley or Goldman Sachs or UBS. And Morgan Stanley, Goldman Sachs, UBS have to start offering custody for digital securities to all of their folks. And until they do that, well, there's going to be an issue. So they need to start getting there, but they can't get there until FINRA and the SEC have made some decisions regarding custody.
So ultimately, the path to liquidity and to more investors is still through brokers and traditional financial intermediaries.
Well, it's always going to, well, you have to define traditional financial intermediaries. You see, most of the wealth in the United States is held by traditional financial intermediaries. You think about blockchain assets, it's only 1.7 trillion market cap. And we may think that's really big, but equities is 85 trillion. Fixed income's 100 trillion. All of this money isn't held by, someone in their electronic wallet. It's held by huge institutions. Now, while it's exciting to onboard 1 million people and have them all do a $10,000 trade, it's a lot cheaper to onboard Fidelity, and in one swoop, they do $1 billion trade. And so when the institutions get involved in these spaces, it's a huge game changer, because these guys trade huge amounts of money on a consistent basis, and they have to. They have to because they've got retirement funds for everyone in the United States and elsewhere. They get pension funds, and all of these have to be invested. And so, yes, right now, crypto is very much a retail-led product, but it's a retail-led product in a market cap of only 1.7 trillion. It's the institutions that need to get involved for the equities and the fixed income as they move on to the blockchain. And when they get involved, then the whole crypto, blockchain universe is going to blow up in a huge way.
And do you think we can ever rid of custodians and traditional intermediaries so that investors, both institutional and retails, on the mass scale, use MetaMask or similar extensions?
Individuals do that right now, right? There's self-custody, not your keys, not your Bitcoin. That's fine. Now with securities, because of the way that we built our security token, and this is what I think gets the regulators excited about what we did. Because you can't, when you have Bitcoin and it's in your wallet and you lose your wallet, you've lost your Bitcoin. When you have a security in a wallet, you can't lose that security. The government won't allow you to. And so we created it with our smart contract so that we know who owns our securities at all times because of the whitelisting of wallets. And so if you lose your wallet, you lose your INX securities, guess what? That's fine. We'll delete those and give you new ones. And so you can't lose, because the government doesn't want someone to lose their 401k or their IRA in a boating accident. And there's no way that Fidelity is going to sit there and custody assets in a zip drive. It's just not going to happen. They're not going to put everything on a MetaMask wallet over at Fidelity. There's $10 billion right there, $6 trillion of assets on a nano ledger. It's not going to happen. And so people need to get over that. Now, certainly for an individual that wants to do self-custody and self-ownership, sure, you can take stuff off of my exchange. You can trade at INX. You can put it in a wallet. You can take that wallet and walk away. Just like the Reddit guys did with GameStop. And they were upset because the exchange said, you know what? I can't trade GameStop. What, are you kidding me? If I said you can't trade INX, then they could take the INX, put it on their wallet and take it somewhere else and sell it to someone else. Heck, they could even do P2P. And you can't do that with traditional equity markets, but you can with digital securities using the construct that we use at INX.
So ultimately, it's about flexibility, but still you can have it combined. You can have the smart contract that enables asset recovery and destroying tokens on one wallet and creating on others, but still have this smart contract as a token on Ethereum held through MetaMask. We have this, for example, with our equity token, Stobox, which is currently on sale. We can destroy it on a wallet if the investor lost private keys and recover on other, but you held this token through MetaMask. Although we're doing the small Reg D race targeted at US accredited investors and international retail, not institutional ones.
Right, and that makes sense because institutions, so our token's the same thing, right? You can hold it on your wallet, you can walk away with it. If you lose it, we'll replace it, fine. And I think that makes a lot of people happy. But at the same time, let's say the US government thinks that, someone's a Russian spy and they come to us and say, you know what, I want to know if this Russian spy has your token, I want you to freeze it. We can freeze it too if we're subpoenaed. So that's why the government really likes this, because when you whitelist wallets, then the government can subpoena issuers and say, who owns this? If you go to Nike today and say, look, tell me all the Russian spies that own Nike, here's a list of names. Nike's got no idea who owns their stock. The transfer agent does. And that changes back and forth. And it's like updated every couple of weeks or something. We know in every single millisecond who exactly owns our security, to every millisecond. And if there's any dodgy business or a scam or something like that, where someone tried to take something from one of our security token holders, guess what? I've got their name and address. That's huge. And the government loves that. That's AML at its finest. Right now, I could take Nike stock. I could give it to you. You could sell the Nike stock. Nike doesn't know, the government doesn't know, but I've just moved money from my pocket to yours. That's called money laundering. And with security tokens like ours, you can't do that.
I think at some point there will be a regulatory requirement to store all the securities in this kind of blockchain system when you have continuous real-time compliance.
Absolutely. And that's, that's why I'm saying it's not me just saying this. This is what the SEC said. They can see all assets moving onto the blockchain. Think about that. All assets. Right now, blockchain market cap 1.7 trillion. You add on another 185 trillion. This is just the beginning. And that's why I keep saying we're just at the beginning. People don't understand this. Now, normally, people won't make a change because they're used to it. 100 years we've had equity. Yeah, but when the regulator knocks on your door and sits outside your front gate, guess what? You move quickly. And people don't understand how quickly things are going to move. And it's sort of like cell phone adoption. For the first 10 years when cell phones were out, no one wanted one. Your mother said, don't put that to your ear, you'll get brain cancer. Or you said, no. I want the free time. I don't want to be traveling on the train or driving in my car and someone calls me. That's my time. And so, there was a lag. Now I think there's 1.4 cell phones per person in America. I think they include iPads in that, but that's crazy in that technology, once people understand that it reduces friction, blows up. It's huge. It's a huge, big game changer. And that's what we're going to be seeing in security tokens. And soon we won't even call them security tokens. We're just calling them digital assets or digital securities. Security tokens.
Simply like securities and assets.
Right. That's right. So security token, it's like a tongue twister. As soon as you say that to someone, they say, what are you talking about? They think about clipping coupons at the store. And so, the vernacular for this right now isn't exactly, helpful, but things are going to change and they're going to change so quickly. And folks are going to be very, very excited about how fast this movement happens. And all INX is looking to do is sort of surf that change. You want to trade crypto? That's fine. You want to trade security tokens? That's fine. But not only that, we also did the roadmap. If you're a full company like Nike and now you want to go on the blockchain, you know who your lawyers are going to tell you to look at? They're going to say, look at the F1 prospectus that INX filed with the SEC. That's the pathway now for every company to move on the blockchain because it's got every single piece in there. Every single part of it talks about what you need to do. And it's got all the questions that the SEC will have for you, so it can make it a lot easier. It took me 3 years, 950 days. I think it was like $3.5 million in cost. The next guy, maybe it's $700,000 and 6 months. And that's also, again, a lot faster than you'll find and a lot cheaper than doing an IPO in equities.
Average cost of IPO on NYSE exchange, as far as I remember, $7.3 million for a small IPO, between $25 and $100 million, according to PwC. I like to flex the statistics simply to impress people with the cost reduction that is possible with tokenization.
Then again, you get what you pay for. When you do an IPO in a national exchange, you get your name on CNBC, you get a lot of awareness, you get all these folks writing research about you. When you go public or you do something in a security token exchange, you don't have 6,000 investment shops all writing about you. So you get what you pay for. There's still some good things on the equity side based upon all of the pathways they have open, but I'll let you into a little secret. We went to New York Stock Exchange and NASDAQ. We said, we want to list our token. We're full registered security, just like Amazon. We like to list it on your exchange. They said, oh, we can't do that. I said, why? Oh, we can't do digital assets right now. We don't have the infrastructure. And that made me think a little bit. I said, okay. And what it comes out is that NASDAQ and the New York Stock Exchange are like restaurants, but they share one kitchen. That's the DTCC. That's the guy that sits there and says, Morgan Stanley sold this stock to Goldman Sachs. It's like Bob Cratchit in the Christmas Carol. Now, none of this is digital. None of it's on the blockchain. And this reminds me a lot of 2012, when Elon Musk went to the big four, he said, hey guys, electric cars. And they looked at him and laughed. They said, you know what, you spend your PayPal money on R&D, we'll buy you in a couple of years. But guess what? He moved so fast that they couldn't catch up. But the reason they said no at the time is they didn't have the money for the infrastructure. Because all of the big four car companies, they've spent the last 100 years building the perfect supply line. And if you go to business school, you'll read about Ford's supply line and how incredible it is and how efficient. And they built all these factories for building combustible engines. But here's the thing. For them to move into electric motors, they've got to throw away the supply line, rebuild it all again, and get rid of all the factories and retool them. And they can't afford it. And that's why Tesla is trading all the way up here and they're all the way down here. And the same thing is true for exchanges in America today. For these guys to build a blockchain-based system, they're going to have to go back to the drawing board. And all of these pipes they have going all into all the different banks, all the broker dealers, they're like old clay pipes from like 100 years ago. So there's a lot of updating that's going to need to be done. And while they're updating, I'll let you into another secret. Guys like Coinbase that have been around for what, 5 years? They're already bigger than the New York Stock Exchange and NASDAQ. They could buy them if they want to, but why would they? That's like Henry Ford turning around and buying a blacksmith. The blacksmiths back in the day, they made all the horseshoes for all the horses, for all the horse and carts. They were fantastic at the job. And then Henry Ford came along with the Model T. You think he said, you know what, I'm crushing these horse guys, these blacksmiths, I'm going to buy them all. No, he said, they're in yesterday's technology. They're going to go die. And that's how I see equities today. Equities is an old technology, and it can't just be fixed and turned around overnight. They've got to invest in infrastructure and all sorts of things. And the time it takes them to invest in that infrastructure, who knows where we're going to be? But maybe I'll be bigger. Coinbase is what, 4 or 5 years old. So it seems to me that if you don't move along with technology quickly and you don't adopt things, you're going to be in a lot of trouble. And I think that that's where the NASDAQs and the New York Stock Exchange could find them today, is that they've been used to something for 100+ years. And guess what? Things have changed. Technology's changed overnight. You may have the best telephone that plugs into a wall in someone's house, but let me tell you, no one uses that telephone anymore. We all use cell phones. And that's the thing about technology. You could be the best blacksmith making the best horseshoes. And I'm sure when cars first came out, that blacksmith sat there and said, you know what, that's too dangerous. Much like people look at crypto today and say, oh, that's too dangerous. That's what the banks look at crypto, right? They look at Bitcoin, say, yep, Bitcoin's too dangerous. Well, that's like the blacksmith saying cars are too dangerous. Who cares? Cars took over, blacksmith's gone. Bitcoin's taking over, the banks are going to be gone. Digital securities are taking over. Who knows where the current exchanges are going to be?
And how do you think will this impact the long-term economy overall? Not only the capital markets and the exchanges and trading, but everyday life of everyday citizen who might not even invest ever?
Well, it's all good. And that's what we're talking about here when it comes to friction. Reduce friction, things are good and people adopt it. Right now, people all around the world can't invest in Nike stock because it doesn't trade 24 hours and it's not in fractional form. Going digital, everyone can, as long as you pass KYC AML. But on top of that, right now, there's money laundering going on all the time in equities. When it goes digital, not going to happen. And so all of these efficiencies are going to create a much better market for someone. If I'm Nike and I realize now that I can sell to all these other people all around the world, and it's not going to cost me anything more, of course I would say yes to that. And now someone in India that maybe earns only $18 a month can invest in fractional format in Nike stock. Great. That's fantastic. So for the issuer, this isn't a bad thing. For the investor, it's a great thing too. Now I can invest in all these different projects, private companies, public companies, in fractional format, all sorts of things that in the past I could never buy into. High-end art, racehorses, music catalogs, whatever. So, you know, giving people choices and the ability to invest in all these different products is going to be fantastic. Now, it's not going to happen tomorrow, but I'll tell you, in 5 years' time, you're damn right this is going to happen. And I'd say in 5 years' time, we'll be half the way through in this journey. In that half of the companies in the New York Stock Exchange and NASDAQ will have dipped their toe into digital, and we'll have maybe 10% listed in digital format. And then they'll start moving over everything into digital. You'll see stock buybacks. They'll be buying back the stock, not to retire it, but instead to put it in a trust that could then trade on the digital exchange. That's the types of things that we expect and that we're seeing and that we're hearing and that we're feeling. And the heads of blockchain at every single investment bank are sending us texts saying this is great for us because now we can take companies and move them onto the blockchain. They can charge another fee to the issuer. But this is the future. It's happening. And I don't care what the blacksmiths say, and I don't care what the banks say, because what I care about is what the regulators say. And you may, people will point to things like Janet Yellen saying, well, I think it's dodgy. I think Bitcoin's dodgy or crypto's dodgy. But what she's really saying is that she wants enhanced KYC AML. She wants to make sure that a Bitcoin made in North Korea can't make its way over to the United States, or make sure that someone that owns Bitcoin pays taxes on it. These are the types of things they want to, tighten up. They certainly don't want to not be in the crypto space. And I give a good example. The OCC, that's the Office of Comptroller and Currency. That's the regulator for all federally chartered banks in the United States. They came out a couple of weeks ago and said they want all banks to start using stable coins like USDC, an ERC20 token. They want them to use them because they think it's more efficient than SWIFT and ACH. SWIFT and ACH, that's a quadrillion dollar a year industry that'll start being done on stable coins. Again, this isn't me saying it, that's a regulator. So you get the SEC and the OCC both saying this is what we're going to do. And you've got folks like Yellen and Powell that come out and say, we like about crypto is the KYC AML. The writing's on the wall. The problem is people aren't reading it.
Thank you for your vision, and thank you for the fantastic interview and these very passionate replies and your general vision about the industry in the future. It was fantastic to speak to you.
Well, thank you very much for having me. I really appreciate always being on your show.
Yeah, thank you.
Thank you.
We have many other fantastic interviews with people from stock exchanges. We have the ex-director of NASDAQ and the head of blockchain at London Stock Exchange. And we have many other lawyers and regulators and fantastic people on Stobox interviews. So make sure to subscribe and check out other videos on this channel. Stay tuned and see you in the next episode.
Thank you.